I'm going to start. Hi, thank you for joining me today. I have some excellent news for you. Remember what I was talking about with the New Zealand USD? Well, let me pull up the screen share and show you what I'm talking about. Bring up the Forex.com, and there it is. Take a look at this. Last night when I was doing my video, I actually had a negative 1919, and it's currently a negative 1460. That's close to 500 pips in my favor. It's pretty surprising and pretty fantastic. And it's doing what I told you it was going to do. Let me refresh what's going on here. This is New Zealand USD, so it's NZDUSD, and I actually have a buy. Now I've been doing this trade, this specific one, since I believe it's June 25th. And when I started this trade, I was at $280. During the time frame, occasionally I've been adding a little extra to bring up my margin level. I cannot have below a 500 margin level for me to do a long period trade. This has been going on for a good almost 4 months. But let me show you what it's all about. This trade, I started it at the entry price of 0.68310. And I put my stop loss in at 6,000 pips negative, or $60. And with a balance of over 700, I can go a long time before it hits that stop loss. But my take profit is also at 6,000 pips, or $60 in profit. I have a 1-to-1 ratio to risk and profit. I'm keeping it there so I don't have a huge drawback when it decides to turn or relapse or go into consolidation, or any trend lines or any indicators. You won't see those on this chart. This is called a naked chart because there is no extra indicators, and all that you see is the stop loss, the entry price, and the take profit. The way I've been doing it is I go into a higher time chart. That's why I like to stay in the day time chart. Gives me a wider picture and the understanding of the story that this trade is doing. Because I can go back to January 1st of 2014, over 4 years ago. And that is why I enjoy it so much. I don't have to worry about the indicators because every time I sleep, I go through grand mal seizures that erase my memory. So I don't have to worry about relearning the different strategies, relearning the trend lines or the indicators every single day. It's hard, very, very difficult. Unlike some of our traders that have been trading for a period of time, they can have all that at their fingertips because they don't have to remember or learn or reteach every single day. It doesn't go anywhere. It stays with them. With my grand mal seizures, I'm like 6 months old. That frame of mind. So I have to relearn from getting up, from moving, from walking to day-to-day situations, and then relearn business, who I am, where I am, who the people are around me, and on and on and on. So you get the idea. The reason I don't hit in the smaller time charts is because, for instance, right here, this is a minute time chart. I'm not seeing very much, are you? Not too much. The 5-minute time chart, it's okay if you want to be in and out in a quick period of time, but I'm not seeing much here either. Then we have the 15-minute time chart, and we're getting a little bit more, maybe the first paragraph of a story, but I don't see the full thing here, and I'd be guessing too much. I don't like to trade where I have to guess, so no emotion and full knowledge, making trading easier for everyone around me, including me. Then I go into the 30-minute. It's okay. It's doable. But I still don't see the whole story. I do not know where that trade is going to be going because there's no history there. Then I move up to the hour time chart, and it's working. It's getting better. But I still want to know what the history is. This only goes back to June of 2018, not too long ago. Let's move up to the 4-hour, and that we have a little more of the picture. But here again, it only goes back to October of 2017. About a year and a half or a year, maybe. It will be a year. Come on. I can see that we're going to need the day. And here is the fuller picture. And it goes back to January 1st of 2014, over 4 years ago, making it so that I can see the pattern that this trade has been doing. It goes up, down, 1, 2, 3, down, up. So it does 1, 2, 3, and it goes up. And it does 1, 2, 3, and then it goes up. And it goes 1, 2, 3, and it goes up. It goes down 1, 2, 3, and up. You see what I'm showing you here? This is all through this trade. This is the trend line that this trade is doing. And it does it over and over and over. And currently, before it went to where it is now, it did its 1, 2, 3, and up. And we're going to go up. There's going to be a time soon, more likely before the end of the month, that this is going to go into profit. And we're going to shoot for the stars. Who knows? It could be quicker, but you never ever trade by looking left. You trade right, but you look left, so you know what the trend line is doing. So you know what's happening. And you can see the further in the time chart you go, the more of the picture, the full story of the trade and the trend line that it gives you. So, with that being said, I can see, because it's currently at negative $14.08. Like I said, yesterday it was a negative $19.19, meaning it went 500 pips into profit for me. That is awesome. And that is exciting in one day. So if I can get the pips, you can too. What is a pip? A pip is a measurement of where the trade is actually at. And with it being a lot size of 0.01, a pip is 1 penny. As easy as that. What is a lot size? Well, there are many different lot sizes. I don't do the full lot because that's a 1.0. I actually do what's called a micro lot of 0.01. Being at that price, I have a very little risk factor for anything. $60 isn't that big of a deal when you have over $700 in your account. You can go for a long period of time. But imagine when it goes into profit, we move our stop loss above our entry price so we don't lose any of the profit. And I'll show you how to do that the closer we get. So while we've been talking, we started this about $14 and something like 28 cents or so. And I've seen it gone to negative $14.08, and currently it's at $14.24. So we're actually doing up and down. And it's good when it's moving. It's an awesome thing because it's doing exactly what it told me it was going to do. The reason I say it told me is because I was able to study this pair, keep an eye on it, know what its habits are, know what its trends are. Yes, I could have put in extra entry points, places for a sell or another buy. However, there's one situation with this broker. They have what's called an FIFO rule, first in, first out. So if I were to put in another place of entry, regardless if it's sell or a buy, I would have to pull my first one out before I could pull a second one out, making it very, very difficult to profit. I would lose way too much, and I don't like that idea. Not to mention, the more positions I put in, the less margin level I have. And I don't like being below the 3,000 mark if I can help it. This is why I do what I do. This is why it's one place, one pair for as long as it takes until it goes into profit. If you think about it, over the last 6 months, I've had a 98% success rate because I do one pair, one trade for as long as it takes. I'm going to stop my screen share and see if there's any questions. Let's get my chair a little bit better. Going once. Going twice, and gone. Now, I want you to know before I leave that I will be doing a presentation every Friday at 6 p.m. and it's free. And all I'll be doing is showing what IML is all about. And you're welcome to join me. If you want to join me, send me a message and I'll give you the link so that you can reply and let me know you're coming. In the meantime, you have a fantastic remainder of your day. Bye-bye. See you tomorrow.